Stop scrolling right now, because what you're about to hear could completely change your financial life. Most people in their 30s are quietly bleeding money without even knowing it. These 10 mistakes are so common, so sneaky, and so damaging that millions of people fall into them every single year. If you're in your 30s or approaching them, you absolutely cannot afford to miss this. Stay until the very end, because the last mistake might be the most dangerous one of all. And if you want more life-changing money content like this, hit that subscribe button right now. Let's get into it. Your 30s feel like you've finally arrived. You have a career, maybe a home, possibly a growing family. Your income is rising, your confidence is high, and life feels like it's moving in the right direction. But here's the brutal truth. Your 30s are also the decade when small financial decisions create the biggest long-term damage. The mistakes you make now don't just cost you money today. They silently rob you of financial freedom for the next 20 or 30 years. The danger is that small, it's fine for now choices around debt, saving, housing, and lifestyle spending can quietly lock in long-term financial drag that follows you for years. So let's break down every single one of these mistakes, starting with the one that feels the most harmless. Mistake number 1 is not saving for retirement early enough. Most people in their 30s tell themselves retirement is still decades away. They think there's plenty of time, but that thinking is one of the most expensive lies you'll ever believe. Compound interest has been called the 8th wonder of the world, and by putting money into a retirement savings account like a 401k or IRA early in life, you give your savings more time to grow, with growth building on top of growth over the years. The math is staggering when you actually look at it. To generate $1 million after 40 years at an 8% annual return compounded monthly, you'd need to invest roughly $280 per month. That's completely achievable, but only if you start now. Experts recommend saving at least 10% of your annual salary, including any company match, and gradually increasing that rate to 15% as your income grows. Every year you delay costs you far more than the money you think you're saving by waiting. Don't let retirement feel like a distant problem. It is today's priority. Mistake number 2 is ignoring your emergency fund. Life will always throw you a curveball, a sudden job loss, an unexpected medical bill, a car breaking down. These things happen to everyone. Experts say you should have at least 6 months' worth of living expenses tucked away in a place where you aren't tempted to withdraw unnecessarily, because everything you've worked for could easily be swept away during a crisis. Yet the reality is that most people don't have this cushion. Research has found that 1/3 of Americans don't have that amount of money readily available. And that situation often leads people to take on debt, withdraw funds from retirement plans, and otherwise derail their financial plans entirely. Without that safety net, one bad month can unravel years of progress. Without an emergency fund, you may find yourself borrowing money at high interest rates, or making financial choices that haunt you later. The emergency fund is not glamorous. It won't make you rich overnight, but it is the single most important financial protection you can build in your 30s. Mistake number 3 is living with lifestyle creep. When your salary goes up, your spending shouldn't automatically follow. But for most people in their 30s, that's exactly what happens. As income grows, it becomes tempting to upgrade your lifestyle proportionally, or even beyond, and this lifestyle creep can quickly eat into raises or bonuses, leaving little room for savings or debt repayment. Better restaurants, nicer vacations, a newer car, none of these are automatically bad. But when they consume money that should be going towards savings, investments, or paying off debt, the damage compounds over time. The key is to be deliberate about where you want to spend more money, and to automate contributions to your emergency fund and retirement account so that increased spending doesn't obliterate your financial progress. Make lifestyle upgrades a conscious decision, not a habit you drift into without thinking. The people who build real wealth in their 30s are not the ones who earn the most. They're the ones who are most intentional with what they keep. Mistake number 4 is only making minimum payments on credit cards. This one feels harmless month to month, but it is quietly devastating over time. Credit cards are designed to be paid in full, but it's all too easy to fall into the habit of making minimum payments only, especially in your 30s. when there always seems to be a new emergency stealing from your cash flow. Between weddings, home expenses, childcare, and the rising cost of living, it can feel like there's genuinely never enough money to clear the balance. But here's what you must understand. High-interest debt competes directly with goals that depend on time, retirement contributions, emergency savings, and home down payments. The longer a balance stays, the more your future options narrow. If you must use credit, pay off your balance in full each month to avoid costly interest charges. And if you're already carrying balances, treat paying them off as a priority project, not just a background bill. Even small extra payments can shorten your payoff timeline dramatically. Mistake number 5 is buying too much house. Homeownership is a major milestone, and your 30s are often when people take the leap. But stretching your budget beyond what's comfortable is a trap that many people fall into. Don't make the mistake of not accounting for other home-related expenses like property taxes, home insurance, and private mortgage insurance if you put less than 20% down. A mortgage is a long-term commitment, and being house poor is no way to live. With mortgage rates still elevated in recent years, your interest costs can be double what they were just 5 years ago, meaning the dream home can quickly become a financial nightmare. The smarter approach is to buy the smallest home you need in the best neighborhood you can afford. That preserves cash flow for emergencies, investments, and the financial goals that actually move your life forward. Your house should be a home, not a financial prison. Mistake number 6 is not diversifying your investments and savings. Putting all your eggs in one basket is dangerous at any age. But in your 30s, when you're building real wealth, it's especially critical to spread your risk intelligently. Your retirement account is not the only place you should invest your money. Open a savings account or brokerage account and diversify your assets among stocks, bonds, mutual funds, and cash to reduce risk and be strategic with liquidity. If you invest consistently from age 30 to 60, the power of compound growth across multiple investment vehicles can be truly life-changing. Diversification also protects you when one sector or market drops. You won't lose everything because you've built financial resilience across multiple channels. This is not about being greedy, it's about being smart and protected. Mistake number 7 is neglecting your credit score. Many people in their 30s treat their credit score as an afterthought, something to worry about only when applying for a loan. That mindset is a serious mistake. Your credit score impacts more than just loan approvals. It can affect job opportunities, apartment rentals, and even insurance rates. Missing a mortgage payment or maxing out credit cards can lower your score and make future financial goals harder to reach. Understanding how credit works, paying all bills on time, and keeping credit card balances low relative to your credit limits is how you protect it. A strong credit score can save you tens of thousands of dollars over your lifetime in the form of lower interest rates on mortgages, car loans, and personal credit. Monitor your credit regularly, dispute any errors you find, and treat on-time payments as non-negotiable. Your credit score is one of the most powerful financial tools you own. Treat it that way. Mistake number 8 is not having adequate insurance coverage. Insurance feels like money you're throwing away right up until the moment you desperately need it. In your 30s, your financial obligations are bigger than ever, and the risk of being unprotected is higher than most people realize. Insurance in your 30s should generally include health, disability, life, home or renter's insurance, and an umbrella policy, though your specific needs will vary based on your personal situation. If you financially support aging parents, have debt you don't want to pass along to survivors, have used a cosigner for a purchase, or have dependents, life and disability insurance is critical when you're young and healthy with few responsibilities. It's easy to postpone getting insurance, yet insurance is meant to protect you from events that could turn your financial health upside down, and the longer you delay it, the more expensive it becomes. Think of insurance not as a cost but as financial armor. You protect everything else in your life. Protect your money too. Mistake number 9 is not discussing money openly with your partner. This one might be the most uncomfortable mistake on this list, but it's also one of the most consequential. One of the biggest mistakes you can make is not having an honest and open discussion about finances, budgeting, debt, and spending habits before you fully merge your lives together. Here's a hard truth. A significant percentage of divorces are caused by financial issues, and if you and your partner aren't aligned financially, you're setting yourself up for serious stress and conflict. Having these conversations feels awkward. Nobody wants to bring up debt on a romantic evening. But avoiding the conversation is far more dangerous than having it. Talk openly about your goals, spending habits, investment strategies, and retirement plans. Even if one partner leaves the workforce, it is important that both partners be involved in making household financial decisions so that each feels equal ownership over the finances. Both partners should be equally capable of managing their financial lives on their own should the need ever arise. Money doesn't have to be a source of conflict. When you're aligned as a couple, it becomes one of the most powerful forces working in your favor. Mistake number 10 is not having a budget and not sticking to one. This might sound basic, but the number of people in their 30s operating without any real budget is genuinely alarming. Many people operate without a clear understanding of where their money goes each month. Without a budget, it's easy to overspend, undersave, and feel perpetually behind financially. A budget is not a punishment. It is not about restricting yourself from enjoying life. Think of it as a map that shows you exactly where your money is going and gives you the power to redirect it toward the life you actually want. A budget gives you a comprehensive view of your financial situation and helps you make informed decisions. It is the power to tell your money where it goes rather than wondering where it went. You don't need a complex system to start. A simple spreadsheet, a notebook, or a budgeting app is enough to begin. The goal is simply awareness, because you cannot change what you cannot see. Once you know where every dollar is going, you'll be stunned by how quickly you can start redirecting money toward your real goals. Now let's bring all of this together, because the picture is clear. Your 30s are not a decade to coast through. They are the most financially defining decade of your entire life. The problem with making financial mistakes in your 30s is that they compound a little less. Saving and a little too much spending at a young age can end up having major ramifications for your long-term financial security. But here's the flip side of that truth. Good decisions also compound. Every smart financial choice you make right now gets amplified over time. Starting your retirement contributions today, building your emergency fund this month, paying off that credit card balance. These are not small actions. They are the building blocks of a completely different financial future. The earlier you start, the more time you give compound interest to work its magic. Pay yourself first at least 10% of every paycheck and invest it wisely. Your 30s are not too late. In fact, for most of these mistakes, right now is exactly the right time to turn things around. The goal is not perfection. The goal is progress, one intentional decision at a time. So take a hard, honest look at your financial life today. Which of these 10 mistakes are you currently making? Are you skipping retirement contributions because they feel optional right now? Are you carrying credit card balances month after month and only paying the minimum? Are you watching your expenses rise with every salary increase without saving a single extra dollar? Are you in a relationship where money is never discussed and quietly building toward a financial crisis? Every one of these patterns is fixable, but only if you choose to face them now, before they grow into something much harder to undo. The financial version of yourself 10 years from now is being built today, brick by brick, decision by decision. We would love to hear from you. Which of these 10 mistakes resonated with you the most? Have you overcome one of these challenges, or are you currently fighting through one? Drop your thoughts and experiences in the comments below. Your story might be exactly what someone else needs to hear to take their first step. This channel is built on real conversations about real money, and that starts with you. If you found this video genuinely useful, please share it with someone in their 30s who needs to hear this message. And if you haven't already, subscribe to this channel right now so you never miss content that could change your financial life. We cover personal finance, investing, budgeting, and wealth building strategies every single week, all designed to help you build the future you actually deserve. Hit that subscribe button, turn on your notifications, and we'll see you in the next one.